On the Market Day Report, I'm John Jenkinson as we continue to watch your markets very, very closely today. We had some information that was out first thing this morning that will be factored into the export sales. There were overnight sales, and it was of corn and of soybeans. In fact, 130,000 metric ton of corn sold to South Korea, 198,600 metric ton of soybeans sold to unknown destinations. And then shortly after that, we had the export inspection numbers that were out. This was a pretty interesting report. Corn came in at 1.07 million metric ton last week, and that was higher than last week's 1.01. Sorghum, and we're watching this sorghum pretty closely, 195,059 metric ton as compared to 152,388. Soybeans, 1.30 million metric ton as opposed to 1.13 last week. So a little bit lower on the soybeans. Wheat quite a bit lower, 428,557 metric ton last week, 581,626. And this is kind of interesting because exporters typically export about 66% of the final wheat shipments by this point. Right now, we're at 63%, so we're about 3% behind as far as the average goes. Let's bring in Scott Gecas. He is with Longleaf Trading. He's also at the edge of the trading floor there in Chicago at the CME Group. Well, happy Monday, Scott. Welcome. Good to talk to you. And first of all,
happy Monday. Thanks for having me.
Yeah, thank you. Let's first of all start off by talking about these exports. We're still a little bit behind, according to USDA and some of their projections.
Yeah, with the export numbers coming in a bit from behind, it's pretty much solely due to the weather. So, I mean, you're seeing weather across the board being a factor. Everything that comes out of the ground, everybody's focusing on the weather. With soybeans in particular, the weather in Argentina is extremely dry. You know, the temperatures are going up to, mid-90s. So, I mean, that's definitely playing into a factor with soybeans for sure. You know, one of the things that did come across, as everyone was talking about, is all this anti-dumping probe for the U.S. in sorghum. But, you know, the thing that really is interesting to me is when we were talking, a few weeks ago, talking about the U.S. putting tariffs on aluminum affecting refrigerators and those type of things. You know, the rumor was that the Chinese were going to go combat that with, the trade with the soybeans. You know, we're not seeing that in the soybeans just yet. It's more towards the corn. So that was a big story coming out that I think that threw a lot of people for a loop. So, we're going to see how that plays out in the near coming weeks.
Scott, I think you make a great point that this goes well beyond that. This has been something that has been building for quite some time, and there are some other things involved with it.
Oh yeah, I mean it's a pretty big story. It is going to have a lot of market impact, so we got to wait and see how that plays out.
All right, now let's find out what's going on at these latest numbers here. We'll start with the corn, as we always do. That nearby corn contract of March is down 1 1/4, 360 1/4. New crop December corn down 1 1/4 at 391 1/4. For the soybeans right now, the front month, soybean market has been lower good part of the morning. March down 4 1/2, 974 1/4. September down 4 1/4 at 993 1/2. March Chicago wheat down 4 1/2 right now, 442 1/4. And new crop July down 3 3/4 at 469 3/4. July Kansas City wheat is down 3/4 cent at 493 1/2. And July Minneapolis wheat is down 2 1/2 at 621. For the cotton market, front month, March down 60, 76.70. December down 36 at 74.72. And on the other side of this break, Scott and I will talk about the livestock. We want you to be sure and stay tuned. We'll be back with more right after this on the Market Report. Longleaf Trading, Scott Gecas is here with us. He is at the edge of the trading floor in Chicago at the CME Group. Scott, first of all, that cattle market could be interesting this week. I see that asking prices are already higher starting out.
Yeah, I mean, the cattle market already, with the weather being, in a factor, You know, in the hogs, the snow and the cold weather, I mean, it's pushing prices higher. It's looking as actually a buying opportunity. You know, production in the hog market alone was up 6% versus last year. You know, traders are net long bullish. You know, I've been saying for the last, month or two, if we can break that 72, 74, we have room to run all the way up to 80. You know, it's definitely in a very strong uptrend, increasing contracts. You know, the cattle market's not far behind. You know, that level right now with the cattle market is 126. That also has room to run all the way up to 135 as well.
Back to the hogs, you were mentioning how far we've got to run here. One of the things that some in the trade have been pointing to is just that incremental slight increase in some of the weights, at least it was up until this most recent snowstorm that's affecting Iowa right now.
Yeah, and that's one of the things with, cattle and the hogs. You know, the weights typically drop down, for the first part of the year. They haven't dropped. They actually were increasing at times slightly, until just recently you just started seeing a pullback with the weights. But the production is there. The weights are higher. So that is pushing prices higher as well, especially with the economy where it is. You know, everyone's at work. Everyone's getting higher wages. You know, that's going to increase more demand as well. So we're going to be bullish in cattle and the hogs as well.
Well, and exports also, that most recent export sales that we had out last Thursday, Scott, it still showed where beef exports and pork exports are doing relatively well. Beef came in at 25,200, well above the average of 10,000. Pork came in at 27,300. So do you attribute some of this to the dollar, or is it a global economy thing?
Well, I think it is the dollar for export prices, but I definitely think it's a global economy thing. You know, as people are working more, have a little bit more money in their pocket, spend a little bit more on beef and pork prices. So, it's definitely everything is pointing to the upside. And
that dollar just a little bit stronger today as well.
Right. And the dollar's a little bit stronger, and it's not really having too much of an effect on those two markets. So, that's another bullish factor, to make that case for it to go higher. So we'll see how it plays out.
Scott Gecas with Longleaf Trading here with us. Scott, thank you very much. Let's go over to the live cattle board right now and get the latest on these numbers. February live cattle down 30, 126.55. April, though, down 27 at 125.85. June fats are down 42 at 117.58. For the feeder cattle market, March down 107, 149.85. April feeder cattle down 93, 150.85. May down 96 at 150.82. On the hog market, down 95. April is down 95 at 72.60. May down 87 at 78.45. June down 113 at 82.52. And we do have the cutout information. The beef cutouts here at midday, both higher for the choice and the select. The choice up 75 cents at 209.85. The select's up $1.05 at 204.50. And for the pork cutouts here at midday, on the pork side of things, it's all mostly lower with the exception of the carcasses. They're up 20 cents at 81.83, but the loins down 34 at 70.73. The hams down $1.52 at 60.64. The bellies down 48 at 148.63. And the crude oil market today and the heating oil market on that crude on the front month, March down 121 at 64.24. For the heating oil market, we're down almost a little over 2 3/4 cents at 2.02 a gallon.
All right, thanks for the recap. We appreciate it, John.